So last week on one of my morning lives, a trader recommended that I take a look at MYOK or Myocardia. And I was helping them break down the options chain to find a good trade when I came across some information that seemed really shady to me and that indicated to me that there could be some insider trading happening around this company. And then lo and behold, MYOK comes out today and says they've met all the primary and secondary requirements for their new treatment they're releasing. So in today's video, I'm going to break down for you the information that I saw which indicated to me there could be some insider trading, and that I'm actually going to share with you a trade that we can take today, a really good trade that we can take right now that we know all the information that's come out. So to start off, let's take a look at the data that I was seeing last week, which led me to believe that there could be some insider trading happening here. So the first thing that I looked at was the implied versus forecasted volatility in my options terminal. So this number here tells me how much the market thinks this stock is going to move in the future. And my forecast is based on the mathematical models in the back end of my terminal. How much do I actually think it's going to move in the future? What is my forecast? And what I really look for in the end of the day, when I first look for a trade idea, is a difference between these two numbers. Because what that tells me is that there's a pricing inefficiency in the options market. And that's where every good trade comes from, right? Trading never really changed. It's always been about buying cheap and selling expensive. And this is how you do it in the option space. So I came in here and I saw an option mispricing. I said, okay, cool. The options are extremely expensive relative to how much this thing is moving right now. So that off the bat gives me a good indicator that volatility is expensive right now, or the options are expensive. But I digged a little deeper, and what I looked at was how they move historically together, right? How does the implied and forecasted volatilities move together historically? And what you can see is they usually move very tightly together, right? In the end of the day, the market is trying to predict how much it's going to move in the future. And this is, historically, how much has this number actually been? And they're usually pretty close. But if we look at the last month, we see something very interesting. They start to actually break apart. So what we see is that the actual volatility that happens, how much movement there actually is in the stock, pretty much stays the same. It actually goes down a little bit. But at the same time that that's happening, the market is implying more and more and more volatility to be happening in the near future, right? So that's this line here going up and up. And when we zoom out, you can actually see how big that spread actually got. Now, this is an anomaly in the market. It's not something you typically see. And if you do see this, it's usually right after a major news release. But in the case of MYOK, there was no major news released yet. No news had actually come out that could be driving this level of implied volatility. So it really had me wondering what the heck is going on here. I took a look at the earnings. Maybe there was earnings coming up that could be driving this, but the market's not even implying a big move for the earnings event, and the earnings wasn't until mid to the end of this week. So going back to my vol trader here, one more piece of information that really led me to believe that there could be some insider trading is this right here, the skew. So what this tells me is basically, where is the demand in the options chain? If this side over here is higher than this side over here, it means there's more demand on the put side. So there's more there is more of the market that is thinking this stock is going to go down than up. But what we see here is a big uptick on the left side, which means that somebody is buying up the out of the money calls and is willing to pay any price for them, no matter how inflated the price. The last thing I needed to look at to really come to the conclusion that there could be insider trading happening here is I needed to look at what's going on in the retail space. Because if there's a lot of retail traders looking at a stock and they're all thinking it's going to go up, then it could actually cause this uptick in the call skew, and it could actually cause this massive increase in implied volatility. Right? So when I look here and I go to the message board on StockTwits for Myocardia, what I see is there's not a lot of watchers. There's under 1,500 people looking at this thing in the retail space, which is pretty small for a company of this size. Now, yes, when I look at the sentiment in the retail space, it is 100%, which means that basically everybody looking at this from a retail's perspective is actually very, very bullish on this thing. They all think it's going to go up. But that doesn't have as big of an impact as it normally would because there's not that many watchers. So it all added up to this picture of there being something going on that I'm not aware of. And when I see a market inefficiency that I can't explain with any sort of rational logic, it leads me to believe that there's something going on that the average person and that I'm not aware of. And that usually means there's some form of insider trading going on. So that is the conclusion I came to, but there wasn't enough conviction for me to actually place a trade on there being but there wasn't actually enough conviction for me to place a trade on there being some insider trading happening. So I just stayed away from it, and my recommendation to people was also to stay away from it. There's a million other trading opportunities out there, so we didn't need to take a bet on there being insider trading. But now that that news has come out, now that we know that they are in the phase 3 of their trials, and we know that there's already been this massive jump in the stock price, a new trading opportunity presents itself. So I'm going to go over that now for you very quickly. Now that the news has actually come out, where is the next big jump in price going to come from? Well, it'll probably come depending on the results of phase 3. But phase 3 is not going to have results for any time in the near future. So what this means is we can expect the stock price to not have a major jump like this again for quite some time. But when we look at the volatility implied in the option space, we can see that the market is still thinking there's going to be this massive move, meaning somebody is still driving a lot of demand for these options. And what we can see if we look down here is that the relative action has gone to a 10 out of 10. It was not at this last week, which was another one of the factors that I used to say, maybe there's something sketchy going on here. But now it's at a 10 out of 10, which means a lot of people are actively trading this stock in the option space right now. So it's keeping the prices high of the options, even though the moves are not likely to be big anymore. So what can we do with this? How can we trade this information? Well, now we can be pretty confident that we know what's going on. We know that there's no more insider information really to come, most likely, because the news has already come out. We have all the information. So what we can do is we can go out into the market right now and start selling options, because they're priced as if there's still going to be a big move, even though the big move has already happened. Sure, it'll still bounce around a bit, but it won't move as much as the people need it to who are buying the options, because they're paying so much in premium. So what I would do here is I would structure some form of an iron condor or some sort of out of the money fly if you still have directional bias, to structure a cheap bet or to collect massive premiums from the people who are willing to pay any price for the options. Since we see that this reaction is so high, the people are more likely going to be willing to pay any price that they can just to get their hands on the options. So they'll pay the inflated premium for the chance to take that directional bet or to own the options on this company. So that's the bet that I'm going to be placing. I think that you guys should consider it as well, include it as a part of your portfolio. Obviously, manage your risk, keep it to under 5 to 10% of your portfolio. But we can go out and sell volatility here because the big move has already happened, and the people are still willing to pay the same price today as they should have been willing to pay last Friday. So that's my video for you guys today. If you found this informative, please leave a comment. Let me know what your thoughts are on this stock, and make sure to subscribe. I release a video like this every single day, breaking down one of the biggest news events or one of the biggest stocks currently going on in the market. And we're actually building out one of the biggest archives of options education for free on the internet. So make sure to subscribe to be one of the first people to get access to all of this information. And if you have anything you want me to break down for you, leave me a comment or shoot me a message and I'll do it in the next video. Thanks a lot, everyone, and I'll see you in the next video.